Hello everybody. So today I am making a video on Axon. So Axon is a stock that has had quite a bit of buzz online actually and on YouTube. So what's the mission? What does Axon do? Well, their mission is to protect life, and that's the original mission. And then they added on capture truth and accelerate justice as this company is moving into more cloud type products where you have higher gross margin than manufacturing hardware. And they're moonshot. And if you follow Peter Diamandis, that's kind of his thing. And Singularity University and all this thing is saying, a lot of founders need to have moonshots. And what is the moonshot of Axon? It's to cut gun-related deaths between police and the public by 50% in 10 years. That is their grand objective. And how are they going to do that? Well, with tasers. So tasers is the device that made them popular and started the company. And notice how for taser they call it a leading less lethal option. And this is also important to note because I think this is one of the main reasons why they don't sell tasers as much as in the US. In Europe they don't sell them as much because there is events of possible lethality when you use a taser. Anyways, I think that's one of the reasons that may be a hurdle to product adoption. But then you have their cloud business, their Axon cloud business, which is a solution to store evidence online, and we'll see that they have a competitor in that space. And then you have the sensors, and definitely the biggest chunk of a business going forward. I think the biggest part of the total addressable market here is going to be the digital cameras that police officers wear and the sensors that you also put in your car, your dash cams and body cameras, in-car cameras. So that's I think going forward gonna be the biggest bulk of their business. Their taser business is very mature. And if you look, they're trying to have a full timeline and provide services through the entire timeline of police work, from the moment that the community reports a crime to the moment that they're dispatched to the moment that they're on scene, then they leave, that they report, and then they submit the information to the justice system. They are trying to provide a service at every single step of the way in this value chain. And importantly, they're hoping for international expansion. And I think they still have some room to grow in the US quite a bit, although they do have some competition, as we'll see. They do have some room to grow in the US, but their bigger area of growth might actually be Europe, Latin America, and Asia quite a bit. That is where a lot of that growth comes. I believe the taser adoption, we'll have to see how they do in Europe. I'm not an insider of this, but for being born and raised in Europe, I remember when this thing started coming out, a lot of people were very upset at this taser. It was getting a bad rap. There was a lot of documentaries about that product, etc. So I think that's one of the reasons why people may be against those, although they're doing very well in the Commonwealth, right, in the UK. So maybe culturally, maybe there is something to be said about that. About body cameras and fleet and even cloud, there's a lot of regulations that come into play. Can you record all the time? This is a country to country thing. All of this to say that international expansion, yes, it is a very, very large opportunity, but it's complex. It's complex to go after international markets. They still have some room to grow in the US nonetheless. Now, how about revenue growth? Well, revenue growth is doing pretty good, but it's decelerating, right? So they had 38% 2020, 27% 2021, 28% 2020, and they've guided actually for 22% revenue growth this year. So there is quite a big deceleration from 2022 if you really think about it. As far as their gross margin, they have a different types of gross margin. Noteworthy to say here that the sensor is the least profitable for them, but the taser product is a bit more profitable. And of course, the cloud, the Axon cloud, is the most profitable product for them. Now, let's talk about the possible headwinds. So the competition again. Well, regular guns could be seen as competition, but any type of other safety equipment can be seen as competition here. And I'm not in that space, but I'm sure they're not the only one. And so that's medium competition, I would argue. They for their evidence setup for the recording of evidence and storing it in the cloud, they do have competition from a company called Celebrite, which is an Israeli company that is actually doing pretty well right now. Stuff that I want to cover on the channel that is a pure play in the evidence collection. And as far as the police officer cameras go, there's a lot of off brands. And depending on whether a police department is, wealthy or not, they may be tempted by getting lower quality or lower level brands. So that's the competition. Competition is not the highest we've ever seen for a company, but it's not non-existent either. There is somewhat of a competition. The concentration is in the police sector. Clearly, that's the bulk of their concentration. But I don't believe that's a red flag. I believe that's good because it's a pretty stable recession-proof sector. That's the last thing they're going to cut is the police in recession. So it's a pretty good sector to sell to. As far as their sales, they're moving a lot of packages. They have a bunch of different packages, even for the tasers. We have a bunch of like monthly packages that they sell, and the bulk of their sales appears to be headed towards subscription bundles and recurring revenue, as you can see here. They're at 90%, so that's quite a bit of revenue is tied to subscription bundles. So I'm gonna call it for recurring sales, which is better. It's a better way to go. And the macro sensitivity, this is the same as what we said for concentration. It's very low because the police, they are not going to cut. As far as the growth runway, so you have international adoption, which is a big deal, and we've just discussed this. But you have another two things. Is first of all, public safety spending in the U.S. You see how they point the U.S. still mostly a U.S. market. It is stable. There's a few dips here and there, but it is stable, which means incidentally that what will make them grow is, are they able to actually sell products, develop more products, introduce more products, and for that they are able to do it. They have a lot of cross-selling and upselling, right? If someone goes to them to buy dash cams, they may sell a taser and vice versa. That's cross-selling. They have a lot of new products. I think one of the more exciting new products in this space of safety is drones, of course, and they appear to be working with drone companies. So we'll see how this goes. They definitely have an opportunity to keep compounding for a decade plus. That's what I see here. I mean, the market is not saturated. The question is, what is the speed that we are going to be able to compound at? Are they going to be compounding at the 20-ish% speed or even less, right? Because we guided for 22% revenue growth this year. Could it be even less going forward? It's a quick move from a 22% to 17% and then 13%. How many stocks have we seen be like that? A lot. Okay, growth back with acquisition, it's been small. So that's a plus. It's a company that doesn't overpay. How about near-term bankruptcy? None of that. There is no risk of that for this company. They are cash flow positive, and the net cash position is 300 million. Not investment advice, but there's very, very little risk in my view. The gross profit margin overall is 62%, which is pretty decent here. 62% gross margin overall. Debt, we've discussed this. We have a little bit of debt, but they have more cash. So it's a net cash position, so we don't mind. As far as the dilution, this is a big positive. They've actually been known to buy back shares. They've bought back shares in the early 2010s. But if you look, they've moved from 0.06 to 0.07 in 12 or 13 years. So it's not moving much. There's no tripling of shares over that period, right? It's a very slight increase. So dilution is a very green flag. Insider ownership 6%. That's great. Founder-led, the business still founder-led, yes, so that's great too. And the revenue per employee, kind of one of my trade metric, not proprietary, but one of my own metrics that I use, which is revenue per employee productivity, and it's high at 422,000 per employee. So employees really pay for themselves in form of revenue. And I will conclude. What is my conclusion on this stock? Well, first of all, let me give you a valuation. This is valuation in my spreadsheet using 62% gross margin, 22% for the next 4 quarter revenue growth. And you're getting at a stock that is steep, that is quite expensive. At a 0.85, that's very expensive in my spreadsheet, and that's despite a recent drop. And therefore, because this stock I find very expensive, I will not be interested in buying it. I can find stocks that are in the first quartile of my spreadsheet that are growing 2 to 3 times as fast as this, and they are in the first quartile. So this is a stock that the market really loves. The market's giving a lot of credit to this stock for their powerful positioning, for their moat, and they're giving a lot of credit, of course, for their profitability and positive cash flow. It's what the market is rewarding this stock for. But as a growth investor, I'm looking for companies that are more early on. This is a stock that I would have been all over in the early 2010s when you see the growth trajectory that they had, definitely. But right now, it's not enough to get me interested, and the price to sales valuation is high. Not only it's high in my trade metric, which is my favorite metric, which is the EV over gross profit over revenue growth, but they're also expensive from a price to sales standpoint because they're at a 13 price to sales. So that's quite steep, I would argue. But great company. That's a great company. If you've owned it for a while and you've ridden it all of the way up, and I would definitely keep holding it, right? If it's a stock that I had bought at like $100, I would totally keep it, right? So anyways, no investment advice. This is just entertainment. I appreciate all of your likes. Appreciate your subscribes. Thank you for watching, and have a wonderful day.